Welcome to Rob and Maria Trading. My name's Rob. I'm a former attorney turned hedge fund manager. My wife, Maria, she's a former banker. She also helps manage the hedge fund. I also used to be a gambler for the last 40 years as a profession. What we're going to do today is we're trading about 122 Zero DTE SPX trades today. And we use AI to track around 1 million. We backtest around 1 million individual trades every night. Then we use AI to calculate what are the best trades for the day. What I'm going to do today is show you, we track about 28 different strategies, and we look at every 3 minutes in the market. We're not going to show you everything that we do in our hedge fund. We don't want to give away all of our secrets, but we will show you about on every 7-minute basis in the top 5 or 6 strategies that we use. We'll show you the top 50 trades that we would be putting on today, that we'll actually be putting on in our hedge fund. So let's real quickly take a look at the market. As you can see, the market here is jumping around this morning. This is the NQs. We like to look at it because we watch the market 23 hours a day. And we popped up early. It's come back down. Again, AI takes all this into consideration. But let's quickly get to the meat of the matter. Here are the trades that you came to see. As you can see, I've put these in order from best to worst. We've looked at literally hundreds and hundreds and hundreds of times and trade strategies. I think this is the top 5 or 6 trade strategies. We actually use 28. This is based on every 7 minutes. We actually use every 3 minutes when we're doing our own investing. We don't want to give away all secrets, like I said. At any rate, the ones in green are triplers. The one in yellow are doublers, and the pink ones are single ones. So these are 3 times as important as these, and these are the doublers. Okay. Now, each strategy, you can see pretty clear here, 20/40 EMA, that means when the 20-minute average is higher than the 40-minute average, that means the market is trending up. So you're going to sell a put credit spread. If the market it then looks and says, well, if the 40 is higher than the 20, that means the market's trending down. So we're going to sell a call credit spread, because the idea is you want to sell a spread and you want that spread to go to 0. And this chart's going to show you what the total profit was for the last 180 days. We also track it for the last 3 months, 4 months, 6 months, 1 year, and 18 months in order to get the best predicted trades. And of course, as they always say, as all the lawyers always say, past results are not indicative of future results, but we've been getting 50 to 75% rate of return using this. Our target is only 40%, but understand where we are. So then we look at the compound annual growth rate. We look at the max drawdown. We create a MAR ratio, which compares your risk versus your reward. Obviously, you want your reward to be greater than your risk. We look at the average margin. A lot of people are concerned about margin. This trade is going to require, for a single lot, this trade is going to require $11,000 in buying power, for example. So if you did a 3 lot, it'd be $33,000. If you narrow in your spreads, we use 150 wide spreads. Some people use a lot less because they don't have the buying power. And if you don't have the buying power that our fund has, then what I would suggest is you can bring it down. You can make it 5 wide, and you're going to only use about $400 in buying power, but then you're only going to make $50 rather than collecting the $280 that we're going to collect. And we would expect this would be the premium capture for the 6 months. And you can see, for example, in these green ones, we would expect a premium capture of around 28%. Now, these were the best trades in the last 6 months. So it's highly likely that these percentages are going to be lower. We're capturing between 10 and 20% on a daily basis. So at any rate, just do a screen capture. Here are the top trades for the day. If you don't see EMA, these are just multiple entry iron condors. So this particular one would go on at 12.58. You'd be looking for $3 on the premium, on the put side, $3 on the call side, and you'd be doing 185% stop loss. That's going to give you the best rates of return, and you can see the times. You can see sometimes they're $2.25 and 95% stop loss. So these are the best ones. Again, take a screenshot of them. Hopefully you enjoy trading Zero DTE SPX. We'll probably do these the rest of the week, and then we'll reset for next week. If you have any questions, just put them in the comments below, and we will reach out to you. Thanks a lot, and good luck trading.